A lot of retail investors are confused if they should actually wait to invest in the Dangote Refinery IPO or they should ignore the hype. Now, most people are saying, is it true that Dangote really wants people to make money from his company, or he's looking for ways to raise funds to actually settle his debt? Now, if you watch this video to the end, you provide answers to those questions yourself. Welcome to Clockwise. My name is Providence, and my guest is here who needs no introduction. So we say resounding virtual round of applause. Welcome, Mr. Kanem. Welcome to Clockwise.
Thank you very much.
Today's conversation will be very interesting. We'll be looking at the Dangote IPO. We'll do a practical analysis of it because I tend to see people still asking questions about it. And today's video will provide answers to those questions. But before we go into that conversation, I'd like us to discuss something very, very important. And that is, let's discuss other companies of Dangote that are already in the Nigerian exchange group. Because you cannot say, okay, we are going to judge Dangote's refinery by the success of these other companies, but we can judge Dangote's vision, the vision of the refinery, by the success of other companies that are already listed on the stock exchange. Now, let's start from the cement. Dangote Cement company already in the stock exchange is doing very, very well. It has been doing very well for a very, very long time. And the good news is that by September, it's also been listed on the London Stock Exchange. They are looking for a way to raise $1 billion to actually do more other corporate functions. Now, how do you see the Dangote Cement stock on the stock exchange?
Okay, so Dangote Cement is about the largest. When you talk about infrastructure play on the continent, it's about the largest. It's industrial play on the continent. It's about the largest. You know that Dangote Cement is not just in Nigeria. It's the largest in Africa.
Yeah.
So raising $1 billion is still very tiny. Still very tiny. And I believe that it will be oversubscribed. And the reason is because Africa is an emerging market. The infrastructure deficit in Africa, according to the African Development Bank, sits anywhere between $68 to $130 billion in annual investment. I call it deficit, but I can also call it opportunity. So that means that there is such huge opportunity in Africa. And the reality is that there is no other destination on the planet that you can get the kind of returns you can get in Africa. There's no other place.
Because of the infrastructure deficit.
Because of the infrastructure deficit, because of the young population, the growing population. Africa is currently sits at 1.3 billion people on the continent, 1.3 billion. And that is projected to get up to 2.5 billion by 2060. That represents a very huge opportunity. Africa is, by the way, the largest the fastest growing continent in terms of human population. Now, when you have, in some other places like Asia, they are contracting, really. So when you have such huge population growth, explosion, if you ask me, then you can see an opportunity, especially in housing, especially in urban infrastructure, in roads, and this is where Dangote plays. So, except you are an investor that is very short-sighted, then you should see that Dangote Cement represents such a massive opportunity. We've seen what they have done in Ethiopia. They are building one of the largest cement manufacturing complexes in anywhere on the continent.
So will it be right for us to judge the Dangote's vision for his refinery on the stock exchange with what is happening?
I mean, it's no. By the way, we are coming to the refinery, but I mean, when you talk about being the largest, there are so many. We have other companies. I mean, some people would say, okay, so there is monopoly, but we have other companies.
Why is there?
Lafarge or Tiga Simple WAPCO. So these names are there. But when you talk about being very ambitious, going beyond the shores of Nigeria, it involves a lot of risks. A lot of risks.
Yeah.
Because you are dealing with geopolitical risk, you are dealing with market risk, you are dealing with economic, financial risk. Because when you go to those companies, those countries, especially where the terrains that you are not familiar with, there are some things that there might be some very unpleasant surprises. There is likelihood of, I mean, if you look at the African countries, we operate, most of those places operate democracies where government changes every 4 years. In fact, government change, sometimes governance is basically for 2 years, then preparation for election. So you have political uncertainty that can really affect your business. Imagine going to an African country, you do the paperwork that is necessary, start building your cement factory, only for another administration to show up and say, no, sorry, we don't know what the previous administration did, but your license has been. Those kind of risks are very common in the African continent. So when you have to deal with such risk, then it takes someone who is very visionary, very bold, and such a risk taker to be able to do that.
So where it is now, is it a good place? Let's say somebody wants to invest. Is it a good place to actually, because they are trying to raise funds, is it a good place to actually buy into the stocks?
So most times for stocks like this, they do what we call rights issue. So rights issue will mean that you should have owned the stock before you can actually buy more.
Okay.
So that's a way of, if you don't participate in the right issue, they get diluted. But if you participate, then you still.
So there are no opportunity for new entrants.
For the offer, we are yet to see it.
Okay.
But when we see it, but I'm telling you that most of them are usually what we call rights issue. For example, First Bank just did a raise. You had a few other companies that just raised some capital. Literally all of them were rights issues. Okay. So. So that's just what it is. Okay. If it's rights issue, you might not be able to participate if you are not an existing shareholder. Okay. But for me, Dangote, with the kind of very massive infrastructure outlook, the very massive work that Dangote is doing, getting across some of the continents where infrastructure build out is very huge, I think Dangote Cement still represents a very serious opportunity. I remember I bought in when we very mentioned earlier around 120 20-ish, and then now it's about 219. I mean, someone would say, sorry, that was not Dangote. Dangote Cement, sorry. It was another name. But I bought in at I think one of the times we mentioned about Dangote. In fact, the last mention we made of Dangote, that was around 910.
Yeah, because I remember it started with 600.
Yes, we started 600, then 910, and then. But I bought in at those levels. I mean,
so now it's
1,000. Yeah. 100. It actually got to 1,180. Now it's back to 1,155. And I know someone will be like, should I buy in at this point? And it has done a very serious run up after we called it. I believe that it will still come back because, I mean, the chart is more like a vertical line up. So, I mean, some of those imbalances, some of those, it will actually retrace to some of its fair value gap. So, to fill some of the fair value gap. So, on a whole, I look at what does Dangote Cement represent. It represents an industrial expansion story. Okay. It represents an infrastructure transformation story. It represents an urbanization story, not on the African continent. Okay. And that means tapping into part of the $130 billion in annual investment, which I talked about, exists in Africa according to the African Development Bank. So it's a huge opportunity for Dangote.
Okay, now, before we proceed to what we'll be discussing today, which is the refinery, let's look at the sugar, because what you're talking about is just the cement. Let's look at the sugar, because as it stands now, they're actually also doing rights issues, and they want to raise funds. They want to cure their FX liquidity problem, to also expand the industry, the company rather. Now, what do you see about that?
Like I told you, Dangote is always redefining industries. Yeah. There's something you should understand about Dangote, and by the way, it still applies to even the cement I mentioned earlier. They've been paying dividend consistently. Okay. I know so many people are relying on Dangote dividend payment. The day Dangote fails to pay dividend, you will see there will be chaos in the streets. So the sugar has been doing very well. I remember we mentioned the sugar at 661 naira 60 kobo. It ran up to 94 naira. And then we actually trimmed our position a little bit. Not because we don't believe in the prospect of the sugar, but again, we also want to manage risk and then rebalance our portfolio. I re-entered again at 70. In fact, I re-entered at 69. It retraced to about 70. I think 70 was the position it retraced to, but it's now back to 79.50.
Okay.
Yes. I'm going to ride it up. I'm very certain it will blow past 94.
So is it a good point for new entrants?
So as I speak with you, it's a new point for, though if you would have entered, if you had set your limit order at that 70, then you would have made a very good buy. But I mean, at this point, it's still a new entrant, because if you look at it, the low that produced a recent high has been retested. So I believe that it is actually going to push higher. That is on the technicals. Actually, I think this is a good buying opportunity. I might even make another buy at this point, but I still needed to get that just down to about 77. 77. I needed to get to 77. Then I get in again.
Now, let's talk about
this is
the right issue.
Yeah,
the right issue. Now, I feel it actually limits new entrants.
Yes. So the reality is that I want you to understand the reason why companies do right issues. If you had a stock, let's say at $70, okay, let's look at where it is now, $79, and then you're doing a public offer at $70. What do you think will happen to the people that are still holding the stock?
Okay.
They will not only be diluted, but they will be shortchanged. So and then you know what they will do? They will sell off their position at 79 so that they can buy into the public offer. So, but when you do a right issue, it means that there is no incentive for you to sell off your position. There's no incentive for you to sell off your position. You basically want to buy in order not to be diluted. So that is why companies like to do right issue. It's a way of rewarding your existing shareholders. Doing a public offer at a lower valuation means that you are literally diluting, especially for those who don't buy in again, your shareholders who don't buy into the public offer. So that is what happens. I mean, we have seen a number of examples elsewhere. So the right issue, like I told you, it's basically to expand the company and ensure that you attract more, because the more you expand, the more you are able to build local. Remember, Dangote does what we call backward integration, meaning it does a lot of they have in growers that provide them, but they also have to go into the farm, literally cultivating, because at a point, if you want to have a very good pricing power and then control your margins, you have to have very strong footprints across the entire value chain. It's not just you being in the manufacturing part of it, but you have to be, because you can be frustrated. It's just a reality. Someone could frustrate you. Someone could come with a better offer for these in-growers and shut you down. Someone could afford to be able to take you out of the market or to take you down in the competition. But when you have a very strong presence in the input part of the value chain, then you are very strong. They still have, and then even your bargaining power with your in-growers will be higher, because when you tell them, listen, I can also do this, really. So they will not take advantage of you. Dangote needs to do that in order to be able to ensure that margin keeps expanding, because the moment you have in-growers selling to you at a higher cost, then your margins will, because most of those other things are stable. But your margin depends on the difference between how much you are getting in terms of the input and how much you're selling.
Okay. All right. Now we can encapsulate everything we've said today to look at what will happen to the refinery once it is listed. But before then, Donald Trump just told us.
We have not mentioned one, NASCON Allied. NASCON Allied, which is now part of the Dangote Group. It has performed very well. Very, very well. Let me go through the chart too. NASCON Allied Industries PLC has done very well. In fact, at this point, I would say it's consolidating.
Okay.
But this kind of consolidation, I believe there is still opportunity to buy down states, because the recent low has not been tested actually.
Okay.
And I think it's still an opportunity. So for our viewers, I'd like you to look at maybe 158, between 140 and 158 as an entry position. I believe that we'll have that, except it breaks above this 219.5. If it breaks above the recent high of 221, then you can be looking at entering at at 206, 207. But otherwise, if it breaks below this consolidation, then you'll be looking at entering between 140 and then 160.
Okay.
All
right. Now let's talk about what happened at the Strait of Hormuz recently during the weekend. And we heard Donald Trump said they've actually signed a peace deal with the Islamic Republic of Iran. And the Strait of Hormuz is now free for movement of energy materials. So how do you think that will affect the world energy economy?
Nowadays I've learned to take some of those things with a pinch of salt.
Yeah.
Because we have heard this resolution story over and over again. And we've seen the averages go. They will go to this week. They will go up,
and they will come down.
Next week they will come down.
So you say Trump is unstable.
We say
Donald Trump is unstable.
I'm not, but it is a tackle. Trump always chickens out. That's you. I'm not.
You make that
no, I'm not saying that actually. But the point is, if in reality, because it's one thing to sign, it's another thing to implement. We want to see. Most of the ships have actually turned off their transponders, so you cannot monitor them. There's a platform that we use to monitor the movement of ships across through the strait. But if in reality the conflict in the Strait of Hormuz, the impasse there has been resolved, I have a sad news. It will not be instant. Yes, the price of Brent, which I can actually check at this point. I mean, we can check the price of Brent. I think it should 84. So I mean that which is actually I mean, it's gone down 84. 84. Yeah. You can see the sharp decline. So it's 84. West Texas Intermediate is even way lower. But the reality is, it has actually caused a distortion, and you cannot. We have seen. Even in the US inflation has ticked up. Nigeria, we are fearing that inflation will tick up. As a matter of fact, analysts are projecting that we might end the year at 17 point something in terms of inflation. We had even thought that inflation will collapse to about maybe 14 by year end, but it's most likely going to tick up. And what that means is that, of course, the CBN will respond. We were even thinking about either they would keep rates unchanged. We were projecting that they would lower rates, but either they keep rates unchanged, or they can even consider rate hike could be back to the table. Even in the US, the Fed rate hike is now above 70% in December. The Fed rate hike in December is now above 70%. So the point is, I would be very happy if the issue is resolved, not just signing. But the parties
implement what they've agreed.
They have agreed. That's number two. Remember, one of the things was that in that agreement was that the US Iran should stop charging for ships that pass through the strait. So if that happens, then we can see a normalization in terms of the movement. That's bringing back 20% of the world's oil supply. And then over time, it will take some time, but over time we'll see things normalize.
Let's rush into Dangote Refinery, right?
Yes.
What do you expect? Now, there are a lot of fears. Fears, and majority people are just afraid. Some say, okay, is Dangote trying to give an opportunity for people to make money, or he wants to raise funds to settle his debts? There are those fears, especially with retail investors. What do you have to say about the refinery? Do you really believe that retail investors will actually make money from the Dangote IPO?
Dangote IPO would be, and you can quote me anywhere, the biggest liquidity event on the floor of the Nigerian exchange.
How big? It's already big.
It's
It's coming very big.
It's coming big.
So how big will it
But
go?
I want you to understand the concept of being a modular refinery. Refining, and I'm going to say this very brief, is a tiny margin business. So what actually pushes the needle, moves the needle, is actually the volume. 650,000. If you've seen over the weekend, we heard that the Dangote has actually increased its offtake of Nigerian crude as foreign buyers have pulled back. There is even likely going to, in the next 3, 4, 5 years, Dangote will completely take off everything that is produced in Nigeria. That's, you're talking about a 3x from here in terms of the capacity. Now, what that will mean, Dangote will now become an infrastructure when it comes, not just Nigeria. Already, you know that Dangote, as of April, Dangote was the world's largest exporter of jet fuel. So you're looking at not just a continental player, but a global player. So I see a tremendous re-rating. Yeah, you might say $50 billion. You might not really look at, if you look at the numbers. We don't even have the numbers yet because we are still waiting for the S1 filing. Once we have the S1 filing, we will know the true numbers that Dangote is doing. And then we'll be able to predict whether we will be able to know whether it justifies the $50 billion valuation.
There's a lot of private placement going on now.
Yeah, private placement based on the projected, projected valuation. But my point is, you need to justify this, because at the end of the day, there is a relationship when you talk about a market valuation, market capitalization, or of a particular asset or a particular company. Then you look at what are the earnings. Does the earnings justify the market capitalization? You look at the EBITDA. There are so many things that you actually look at as an analyst before you can say, okay, this stock is cheap, this stock is overvalued. So you can't have those, you can't say that for sure. All these things are basically projections, but you can't say that for sure until you see the S1 filings that will tell you how the company has fared financially since it started. Do you understand? So that's what I'm saying. But for me, because of how strategically important the products that Dangote produces is to the continent, then you are going to, I believe it's going to be a very strong continental play and equally a very strong global player. The modularity ensures that it is able to expand seamlessly and access more markets. So Dangote is going to be a competitive play. Yes, I might not be going in immediately because I believe that even though people would want to, especially early investors would want to actually get their money back, but it is a play that I'm definitely going to be part of.
All right, before you go, what do you advise retail investors? What do you advise them to do at this point?
I think for retail investors,
because this will be a competition between retail investors and huge funds.
Whether it's
what do you advise them?
Whether it's huge funds, of course, there is a lot of liquidity inflow that is going to come in. PENCOM has approved that Pension Fund Administration should come in to take part in the IPO. So for me, I think beyond even the Dangote, remember that the impact it will have on the NGX capitalization is going to be huge. In a previous video, we talked about ETFs that track the market capitalization of the NGX. So if you don't want to pick a name or pick and choose a name, like you don't want to invest in that, you are not sure whether it will go up or down, why don't you go in? At least you are sure that it will have a very positive effect on the NGX. So why don't you look at the an ETF that follows the all share index?
So you advise retail investors to focus on ETFs.
You can focus on ETF. If you want to take the risk, you can actually go in there, or you can. Of course, the ultimate thing is to ladder in. Don't rush in at the same with the first at the opening. Why don't you ladder in? Let's see what happens. If, as a matter of fact, today is. I've not bought SpaceX yet. I mean, it opened at 135. It's up to 160 now, but I've not bought. I still intend to buy in, but I want to buy in. Not just I want to wait until the existing shareholders have been unlocked, so that I know that very serious sell pressure will come into the market as people try to realize their gains. Then I can get it. I believe I will get in at a better value.
That same strategy to Dangote.
To Dangote.
Why?
Because I know that existing investors would want to cash out. So that sell pressure will be there. I'm not sure that the existing liquidity might be able to support that sell pressure. So I think it would give me a better buying opportunity down the line.
All right, thank you very much, and I think that's a very better place to leave it. Thank you for coming.
You're welcome.
All right, on that note, we'll come to the end of today's episode of Clockwise. And please do not forget to like, subscribe, and also put on the notification bell on this channel because of the amazing content we bring. Now, if you want to actually get close to us or have a one-on-one conversation with any of us, we have a link on our profile page, the profile page of this channel, a Telegram link that actually brings you directly to our community where you can actually ask us direct questions anytime and we'll answer in real time. So the link is there, click through it and you come directly to our community. Thank you very much. My name is Providence, and please do not forget that you have to share this video to ensure that those who really want to know more should also know more. See you again in the next video.